2/3 of fiat currencies are not worth the paper they're written on, according to the CFTC chairman. Next on your 4-Minute Crypto Daily News. Hello and welcome to 4-Minute Crypto. Now today's show is from a post by Wilma Wu at Bitcoinist.com and is brought to you by the Texas Bitcoin Conference. Take a look at this great conference coming to Austin, Texas at texasbitcoinconference.com. And before I start, I want to remind you to like, subscribe, and share. Now, the head of the U.S. Regulatory Commodity Futures Trading Commission, also known as the CFTC, sees Bitcoin and other cryptocurrencies as helping consumers escape fiat currency in the majority of the world by the year 2028. In his comments about cryptocurrency regulation in the U.S., Chairman J. Christopher Giancarlo said, "I personally think cryptocurrencies are here to stay. I think there's a future for them." He went on to say, there's 140 countries in the world. Every one of them has a currency. Probably 2/3 of them aren't worth the polymer or the paper they're written on. And those countries rely on hard currency. Bitcoin may solve some of the problems, but we're talking 10 years down the line. Giancarlo likely noted the CFTC and fellow regulator, the Securities and Exchange Commission, also known as the SEC, were concentrating on fraud regarding cryptocurrency at the present. He continued, "No, on one hand, we're really strong and hard against fraud manipulation, and on the other hand, we're innovative and thoughtful when it comes to innovation." He was asked how he would explain to consumers that Bitcoin derivatives were legally able to trade while the SEC had consistently red-flagged exchange-traded funds, also known as ETFs. Giancarlo answered that the remits both agencies work with were developed in the 1930s and were essentially ill-equipped to govern the new phenomenon. He said more broadly, the SEC's oversight is over capital formation markets with a big retail focus. The focus of the CFTC is on risk transfer markets, and we've always focused on derivatives and a lot that is institutional trading. We have a different orientation and different histories, so we do come at these things from different perspectives. So what do you think of Giancarlo's comments? Let me know your thoughts on Twitter, where I am at Gary Leland, and don't forget to join me every weekday morning for a new episode of 4-Minute Crypto. This is a CryptoCousins.com production.